Most people are completely missing where the money is going in AI. Hello, I'm Lynn, and this is Lynn's 10-Minute Alpha, your 10-minute edge in finding the biggest opportunities. Everyone is asking the wrong question about SpaceX. Most people are asking, should I buy the IPO? Will it pop on day one? Is it worth $1.75 trillion? Those are good questions, but they are not the most interesting question. The real question is this: who already won? Because if SpaceX really goes public at a valuation near $1.75 trillion, this may become one of the greatest venture capital bets in human history. Not one of the greatest space investments, not one of the greatest Elon Musk trades, one of the greatest investments ever made. And the people who won did not buy SpaceX when it was obvious. They bought it when it looked insane, when rockets were exploding, when Tesla was almost dead, when the entire company looked like a science project funded by a man who refused to quit. That is the real story. And it may teach us more about investing than the IPO itself. Because by the time ordinary investors see the stock symbol on NASDAQ, the biggest money may have already been made. Let's talk about the people who believed first, the ones who wrote the checks when almost everyone else walked away. Peter Thiel, Luke Nosek, Steve Jurvetson, Antonio Gracias, and the small group of early believers who looked at a company with failed rockets, no public market, no clear path to profit, and said, yes, I want in. That is where this story begins. Not at the IPO, not at 1.75 trillion, but in 2008, the year SpaceX almost died. At that point, SpaceX had failed 3 launches. Tesla was also in deep trouble. Elon Musk was not yet the richest man on Earth. He was not the owner of a global satellite internet network. He was not the face of the AI infrastructure race. He was a founder under pressure, trying to keep 2 extremely difficult companies alive at the same time. And this is where venture capital becomes very different from public market investing. In public markets, people love certainty. Revenue, margins, guidance, analyst estimates, charts, quarterly earnings. But venture capital rewards something much stranger. It rewards the ability to recognize a future before the numbers can prove it. That is what happened with SpaceX. The numbers did not prove it. The launch history did not prove it. The balance sheet did not prove it. The mission did. And that is why the Founders Fund bet matters so much. Luke Nosek, one of the co-founders of Founders Fund, together with Peter Thiel's Circle, backed SpaceX when the company was still extremely fragile. This was not just a financial trade, it was a worldview trade. The bet was not at, will this rocket company have a good next quarter? The bet was, can one company fundamentally change the cost structure of space? That is the kind of bet that sounds ridiculous before it works, and obvious after it works. Today, if SpaceX lists near $1.75 trillion, that early bet becomes almost mythical. Because the lesson is not simply they made a lot of money. The lesson is the largest returns often come from moments when the world still thinks the idea is impossible. Now let's talk about Antonio Gracias and Valor Equity Partners. This is one of the most important but underappreciated parts of the SpaceX story. Antonio Gracias was not just another investor. He had been close to Musk for years. He had invested in PayPal. He invested in Tesla. He joined Tesla's board. And then in 2008, when SpaceX was under extreme pressure, Valor backed SpaceX. That matters because most investors like to say they are long term, but most people are only long term when the chart is going up. True long term investing looks very different. It looks like writing a check when the company is close to death. It looks like defending a founder when the headlines are ugly. It looks like holding through years when nobody knows if the mission will actually work. That is not spreadsheet investing. That is conviction investing. And if the reported stake numbers are even close, Valor's position could be worth an extraordinary amount after the IPO. But again, this was not bought at the IPO price. This was earned through time, through risk, through being early, and through staying. That is the part most retail investors forget. You do not get venture capital returns just because you buy the same company later. You get venture capital returns because you entered when the future was still heavily discounted by fear. Now let's talk about Steve Jurvetson. If there is one Silicon Valley investor whose name keeps appearing around Elon Musk's biggest companies, it is Steve Jurvetson. He is not just a casual backer. He is one of the people who kept showing up early. Tesla, SpaceX, The Boring Company, Neuralink. he understood something about Musk that many investors missed. With Musk, the timeline is usually wrong, but the direction is often right. That sounds simple. But it is incredibly important because many investors lose money betting on Elon Musk's timelines. He says something will happen in 2 years, and it takes seven. He says a product is almost ready, and it takes far longer. Self driving, Roadster, Mars, Starship, the dates are often wrong, but over a long enough time horizon, many of the impossible things start becoming real. Reusable rockets became real, Starlink became real, electric vehicles became mainstream. And now SpaceX is preparing for what could become the largest IPO in history. So the real question is not, was Musk early? He usually is. The question is, can you survive the gap between the promise and the delivery? Steve Jurvetson understood that gap better than most investors. And that is why his story matters. Because the biggest winners in the SpaceX story were not just the people who believed in the vision, they were the people who survived the waiting period. That is the hardest part. Now let's zoom out. What exactly did these early investors buy? They did not buy a normal rocket company. They bought a compounding machine disguised as a rocket company. Layer 1 was launch. SpaceX lowered the cost of getting to orbit. Layer 2 was Starlink. Once launch became cheaper, SpaceX could build its own satellite internet network. Layer 3 is government and defense. Once you own orbital infrastructure, governments become customers. Layer 4 is AI and compute. Once the world runs out of power, cooling, and data center capacity on Earth, orbital infrastructure starts to look less like science fiction and more like long-term strategy. And Layer 5 is optionality. Mars, lunar infrastructure, military networks, space-based data centers, autonomous logistics, point-to-point cargo. A company like this is almost impossible to value with traditional tools. That is why the IPO is so fascinating. If you value SpaceX like a launch company, the price looks insane. If you value it like a satellite internet company, the price still looks aggressive. If you value it like a future AI infrastructure monopoly, the conversation changes. That is the entire tension of this IPO. Is SpaceX the most expensive aerospace company ever? Or the cheapest future infrastructure company we will ever see? That is what the market has to decide. But the early investors did not wait for that debate. They bought the uncertainty, and that is why they won. Now, here's the uncomfortable part for ordinary investors. By the time SpaceX reaches the public market, it may already have gone through the most explosive part of the value creation curve. That does not mean the IPO is bad. It does not mean SpaceX cannot go higher. It does not mean retail investors cannot make money. But it does mean the nature of the bet has changed. The early investors were buying survival risk. Public investors are buying execution risk at trillion-dollar scale. Those are not the same trade. In 2008, the question was, can SpaceX survive? In 2026, the question is, can SpaceX justify one of the largest valuations on Earth? That is a much harder public market question. Because once you are valued at $1.75 trillion, the market is not just asking you to be great, it is asking you to become historic. So when people say, I want to buy SpaceX because Peter Thiel and Steve Jurvetson made money, be careful. They did not make money by buying obvious success. They made money by buying misunderstood failure. That is a completely different game. And this is where I think the real lesson is. The greatest venture bets are not about finding a good company. They are about finding a future that looks impossible, but is actually inevitable. That is what happened with SpaceX. The rocket failures were visible. The hidden cost curve was not. The explosions were visible. The future infrastructure layer was not. The cash burn was visible. The monopoly potential was not. Most investors saw a company that might fail. A few investors saw a company that could own the infrastructure of space. That difference created one of the largest wealth transfers in venture capital history. And now the public market is being invited into the story, but at a very different price. So, what should ordinary investors learn from this? Not buy SpaceX at any price, not never buy IPOs. The lesson is much deeper. Ask yourself, where is the next SpaceX moment? Where is the next category that looks too early, too risky, too weird, too expensive, too impossible? Because by the time everyone agrees it is obvious, the venture return is usually gone. SpaceX may still become much bigger. But the greatest SpaceX trade already belonged to the people who believed when belief was expensive. Peter Thiel, Luke Nosek, Steve Jurvetson, Antonio Gracias, and the small circle of investors who did something very rare. They understood Elon Musk before the world was forced to. That is why this IPO is not just a public offering. It is the closing chapter of one of the greatest private market bets ever made, and maybe the opening chapter of a completely different public market story. So let me leave you with one question. If you could go back to 2008, three failed launches, Tesla nearly dead, SpaceX running out of money, would you have written the check? Most people say yes now. Almost nobody would have done it then. And that is exactly why the winners won. If you want to stay ahead of where the money's going, like and subscribe. More alpha coming.